The morning after the long night before. 10 hours of talks at the EU summit produces agreement and progress on banking union, albeit diluted progress. Stocks and the euro take a breather. I'm Jamie McGeever and this is today's Market Pulse. The rally continues though in the Eurozone bond market. Italian and Spanish yields hitting fresh 7-month lows, Spain testing 5.3% this morning and Italy down as low as 4.71%. Sentiment also boosted by a remarkable sale late yesterday of Italian inflation-linked bonds. 18 billion euros, making it the largest debt offering ever outside the United States. That's enough to cover almost all of Italy's funding needs for the rest of the year, and Rome says it will now scale back issuance plans for the rest of 2012. Well, what does the EU's agreement on banking union mean for the continent's banks? I'm joined now by Reuters European banking correspondent Steve Slater. Steve, good to see you. Progress last night, but as I said, diluted. ECB supervision won't start on January 1, and it's unclear if all 6,000 Eurozone banks will fall under ECB supervision. What does this mean? What's your take?
Well, I think a banking union is clearly essential, and many people say it's needed as a key step in harmonising rules and supervision across the union. But there are still lots of questions about when it will come into force and how you put this in place to cover 6,000 banks in Europe. You know, there are already suggestions that France or Germany will try to delay the process, and there are a lot of question marks. Most people want to see this in place. It's a key step, as I say, but we need to see that take effect from early next year.
We're talking about 6,000 banks, and of course it should be made clear those are 6,000 Eurozone banks. What about the banks outside the Eurozone but in the EU? I'm thinking specifically UK banks.
Well, Britain's obviously keen to keep London as the main financial centre, but all of the EU countries that are outside the Eurozone are very keen to keep their voice. They don't want to be ridden roughshod over by the Eurozone. So there will probably be changes in the structure of how rules are set at the European Banking Authority, for example, so that maybe UK or Norway get a stronger weighting, and so that a block of Eurozone countries can't just set the rules and dictate financial regulation for the non-Eurozone countries.
Okay, let's finish up with earnings. The European banking earnings season kicks off next week. We've got Credit Suisse and Santander stocks, as you well know. European bank stocks a 7-month high yesterday. Can the earnings keep that rally going or not?
Well, the earnings should be decent. Bond trading picked up, particularly in August and September, as we've seen from the US banks. So the investment banking earnings should be pretty decent for the European names. But there were still so many questions about the structure of these banks. What investors really want to see at these results. It may be too early for hard details, but they want to see progress is being made on cutting costs, cutting jobs, restructuring businesses so that they can become more profitable and have a more sustainable ROE to deliver to investors. Because at the moment it's paltry. So
okay,
yeah, they need to reassure on those moves.
Okay, Steve, thank you very much. Under the macroscope today, UK public finances. Some cheer for Finance Minister George Osborne as the budget deficit for September comes in below forecast and borrowing in previous months is revised lower. The fall comes as tax receipts keep up with the growth in government spending. The year-to-date deficit is still about £5 billion higher than forecast, but the gap is narrowing. Before we go, a reminder that this is a dark day in market history. Today is the 25th anniversary of Black Monday, when the Dow posted its biggest one-day decline in history. The 22.6% crash wiped billions off stock prices. But optimists might like to remember this. The Dow still managed to end 1987 in positive territory. That's all from us today, but join us every day at this time for Market Pulse, a look at what's moving in markets and why. I'm Jamie McGeever. This is Reuters.